Hello, I'm Roy Zimmerhansl, and every week we do a live stream session, usually on securities lending. This week, though, we're taking a slight detour and talking about cryptocurrencies. It was a pretty lively discussion, and we've extracted the key bits from the session, so let's get to it.
Hi, everybody. So I've been in the market making for ETFs for the last 20 years. My journey into crypto started back in 2013 when I sat down with Charlie Morris, who was at HSBC. He was the absolute fund manager for their biggest fund there. And we started discussing how we can enhance trading and ETFs with this new asset class. And I got incredibly excited because the market for ETFs as a market maker was incredibly hard to make money in. Spreads were getting tighter. The market was actually quite competitive, and there weren't really any juice left for a market maker to really do a proper business. Certainly in the OTC side of the ETF, where large orders are generally given to market makers, and you have to be very tight in order to win that business. So I looked and explored the crypto side. I became chairman for a small company that we listed on London called Consibium. I then started with one of my Irish friends to launch an SPV in Ireland for the first Bitcoin ETP. That didn't work because the Irish commissioner actually let us down, and they decided they didn't want anything to do with crypto. That was back in 2015. I then did some consultancy work trying to launch a Bitcoin ETP, and I became the CEO of the very successful XBT provider in Sweden for 3 years, which is now run by CoinShares. Since then, for the last 2.5 years now, I've been focused with a Swiss company called 21Shares. We are by far the largest exchange-traded product focused on crypto assets. We have $1.5 billion in assets, but we have 14 products available to institutional investors. And we list on various European exchanges with a team of around 40 people today, which are scattered all around the world. Our focus is really to give access as an option to these products when investors cannot buy crypto directly. And I'm very excited to deliver new innovative products in the DeFi, in the decentralized finance, which includes a lot of securities lending activities, particularly in crypto, but as well conventional and basket of crypto assets, which are now available on various exchanges. So I'll stop there.
Okay, thanks, Laurent. And that's all the time we have today. And we'll catch it now. Sorry about that. Now to he's been over the last couple of weeks. He's been lovely and talented, and now is our weatherman for the day. John, over to you.
The forecast for the next 10 days is rain in the UK, so be prepared. Morning, everybody. John Arnesen. I'm the consultancy lead for Pierpoint. Prior to that, I have an extensive background in running various agency lending businesses.
Sure. So I've been, as I said, a market maker for various issuers between 98 and 2013. And we built successful franchises as a market maker. Today, the market maker in the ETF space is very key for the liquidity provision of all of these exchange-traded products that are out there, whether they are ETFs, ETNs, ETPs, and I'm happy to go through all of these definitions because they are mind-boggling, and a lot of people get confused as to what they are. Because ultimately, we will never have a Bitcoin ETFs, right? And I want to be very clear on that there are in the US already products that are called Bitcoin ETFs, but there's no way we will ever have that. An ETF is, by definition, a basket of stock or fixed income that follows a diversification and an index. And for that reason, through that diversification, it can be a fund, and that allows investors to buy onto a conventional stock exchange. What we've done is very similar to these type of structures. They are called ETPs because in Switzerland, where we're based, ETPs cannot be like the term that you're using in broad Europe, which encompass all of the structures available, whether it's an ETF, ETCs, or ETN. So there are two definitions: ETFs, the conventional fund structure, which are UCITS compliance, and then ETPs, which encompasses really the commodities of these products. And we're promoting these products into Europe, and they are effectively debt instruments. They are debentures where the debt structure actually holds the underlying assets. And in this case, we are using crypto for it. So it's been a fascinating journey for me because I've come from the sell side, really promoting OTC orders and trading on exchange and providing liquidity to these products where the market maker will hedge itself through a basket, through a proxy, futures. And then suddenly came the commodities with gold, precious metal, agriculture. And now we're in this new era, a new nascent currency, which is a crypto. So how do you offer these types of products to institutional investor where they're very accustomed to trading these very safe and effective, efficient products to the market? So we've created these so-called ETNs, where the banks have been very successful for the last 20 years, right? So an issuer, generally a bank, can promote these secured structure to their clients, but they will be the market maker. What we wanted to do is make these products independent by finding a key market maker, the ETFs market maker that we're quite accustomed with, and they are quite a lot, but probably to your audience, Roy, these people won't be quite known. So they're the likes of Flow Traders, Susquehanna, Jane Street, Bluefin, and then all the banks now that are actually getting back into Delta One trading. And these people are trading every day all different asset classes in order to promote the liquidity of these ETFs to institutional investors on the conventional market. And we've now done the same by offering crypto ETPs to the institutional investor in exactly the same structure that an ETF today exists. The only difference is that they're not funds. They are debt instruments, and it allows these investors through the market maker, the regulated market maker that we know today, to provide that liquidity on screen. And we've done this very well because we have independent market makers, independent administrators, independent custodians who are regulated. And these are very conventional and structures that institutional investors are quite used to investing. And all we're doing is we're offering these trackers, right? Because that's what they're called, they're trackers, giving the performance of the underlying assets minus a fee, which is a management fee.
Out of cryptocurrency, and I'm going to use blockchain as a Bitcoin rather as a sort of catch-all, came blockchain technology, which the crypto side of blockchain is inefficient, and it made reference to the mining, which of course is quite debatable and controversial at the moment, given that I hear it's using all the power of Argentina, but I've heard other voices saying that it's actually quite minuscule when you compare it to other industries. Because it seems to me that blockchain technology does have an application in the real world and in the future. And therefore, maybe out of it came something quite useful. You refer back to the white paper, which I didn't actually know existed until yesterday. To me, it seems that they were trying to create an alternative currency in a kind of cyberpunk way to disintermediate banks and central banks.
People need to look at the white paper. The white paper is very simple and it's very clear as to what it does. Beside that, there is a huge ecosystem that is in place. And again, I want to make sure that the audience realizes that Bitcoin and any cryptocurrency is purely speculative today, and you cannot have blockchain without Bitcoin. Blockchain exists because of cryptocurrencies. Blockchain is a glorified database that just holds transaction. It does that very badly, we know, because it's 7 per transaction, but that's irrelevant. What is relevant is that there is a huge ecosystem behind that actually supports that industry. You cannot have blockchain without crypto and crypto without blockchain. It just doesn't work. Today, there are no enterprise solutions that work outside cryptocurrencies. It's a fact. Now, people want to be in there because there are financial rewards. And we know that in decentralized finance, and this is something that for you, Roy, is very valid, is that there are returns. And people go into this industry because they want return. They may want a quick buck, and that's been definitely shown and manipulated. We're not disagreeing there, but people want return because they're not getting these returns in conventional market, so they're exploring other assets. And these assets today are there to stay. The government, like you said, will probably ban them, but they will go elsewhere. They will not go away. In fact, if we look at governments, El Salvador just recently moved quite strongly into a very unprecedented regulatory regime, which now Bitcoin is an accepted currency. For whatever reason they decided to do this, it doesn't matter. We are moving in an area which is now going to be the pedestal of foreign currencies. I'm not saying this will take off, but why are they doing this? And they just don't want to be pegged to a other currency, which is where we believe, at least the general community of crypto fanatics, that emerging countries will do the same sooner or later. Certainly not westernized one, but we need to be clear that crypto is a speculative currency. It moves up and down, and there are a lot of people who can lose a lot of money on the back of it. But they are looking for that extra return. But it has a value that people are willing to pay for it, and today it's $40,000. The same can be said about gold and US dollars. It has no values. And there's a lot of asset that has no value, but people are willing to speculate it. And we need to be realistic that this is what we have today, and it's a very speculative industry. And at the moment, it's not made its worth in any enterprise solution, whether it is in your business when you started or anywhere else. But people want to hold them, and that's what we're offering as an option.
Laurent,
sorry, Roy. Can I just add something? Because Laurent's touched on something interesting that I heard over the weekend. I think he's an 18-year-old guy. He said, "Look, it's just not fair. My parents had the housing boom last century." He said people that are sort of a decade or two older than me had the recovery from the dot-com bust and technology shares. And we have a world of basically zero or negative interest rates. What do we have? What we have is cryptocurrency. That's our opportunity to make this sort of transformational return. So, yeah, and look, just to reinforce the comments from I think everyone, I think the FCA came out last week just to remind everyone that client money rules aren't necessarily going to provide any protection on cryptocurrencies that investors have with intermediaries. So they were very clear about that. That in their view, it is speculative, and it's interesting because they have approved a tiny number of entities to be offering digital assets. John, you wanted to say something?
Yeah, I was going to ask on the back of that to Laurent. According to Google, there's almost 5,500 various cryptocurrencies. Why do we need so many, given that the market share of Bitcoin is so huge? Do the others really matter, or were they just trying to jump on the bandwagon of Bitcoin? What are they providing that Bitcoin can't?
Probably nothing. There's a lot of people that can go out there and create the RoyCoin, right? And no one stops you from doing this. If you have enough network power and if you have enough support, it's like Facebook. If you have enough users, Facebook has a value. And that's actually what it's doing. These cryptocurrencies, these tokens that are out there, if there are enough people who can hold them and trade them, it will create some value. And that's what it is. There is this sort of effect that, in a way, the more people who wants to step into this space, because they're seeing others getting some form of capital appreciation, then they're saying, well, why not us? And Roy raised a very good point. Our parents and grandparents benefited hugely from the property boom. What are these people got left? They can't buy property. The stock market is depleted and hyperinflated. So there is now suddenly this new asset class. And again, I'm not saying that Bitcoin won't survive. It will survive in some form. And this is one of the reasons, John, why there are various other protocols available. I mean, today you will have heard from Ethereum, which creates smart contracts. I think this idea is wonderful in terms of generating some form of contract that triggers a live mathematical activity and then obviously pays someone for that transaction. It's just a bit like a bet, but it's electronically coded. And when that actually happens, I will get paid.
Yeah, look, David Schoen has put in a couple of excellent questions and comments here. I want to show one of these up and talk about it because we've talked about the kind of the background in terms of disintermediating counterparties and not requiring these sort of trusted intermediaries. Yet we have this kind of this new infrastructure that's just substituting the entities that we have today with new entities or new departments of existing intermediaries, and so the whole question about central bank involvement. So let me just read this because I think it's kind of a great comment. David's saying, I feel the argument that there's no value to cryptocurrency has a parallel in our collective belief in the myth that is fiat currency, right? So I think as Laurent said, the reality is the only reason we think currencies have value, or it might have been John, might have been anyone. It wasn't me. That's all I know. The government money only has value because we believe it has value. If we all decide today that the dollar doesn't have any value, it will go to zero, right? There is nothing behind it. So the question is, the one thing that let me just read it out. I can't read it all on screen, so hold on. One thing that underpins that myth is the concept of accountable parties, such as central banks and countries that back the myth in theory. Some of the skepticism to move into the crypto space is the lack of trusted backers, as with any new asset type. And does the audience, and I'll extend that to the panelists, feel that government backing of cryptocurrency would be the key to cementing adoption? And if so, would you say El Salvador being a first adopter against or for that trust in cryptocurrency, would that make it better or worse? So it put in another way, as we talked about in kind of our prep session, is the fact that this was supposed to be a liberal sort of freewheeling, sort of direct to direct proof of work item, has that been undermined by the fact that the ones that seem most keen on it are actually dictatorships? So that's open for anyone to start comments on.
Let me just step in there, Roy. So, CBDCs and cryptocurrencies have different design and serve different distinct purposes today, right? So the former are guaranteed and supervised by the government, and cryptocurrencies are emitted and verified by an algo with the help of not just one single entity, like a central bank, but by thousands of people. So it's really a consensus base as opposed to a trust. And, these central banks now realizing that it's inevitable that some form of cryptocurrency is going to be in their portfolio, because gold has been there for many years as a hedge, as a reserve. And, it's now inevitable from an economic perspective that these central banks are looking at electronic currencies. And we all know that all our currency is electronic. I mean, 95% of all transactions are in the derivatives market, Roy, they're all electronic. So only 5-6% is actually cash. Probably more since this year, but inevitably we are moving into an electronic form of currency. And by far, Bitcoin is not the solution. It doesn't serve that purpose. And anyone who does believe it is not really looking at the white paper. El Salvador movement is only showing to the world that Bitcoin is not just a digital gold. it has other purpose. The network itself could be leveraged and a censorship resistance payment rail for processing, let's say US dollar. We don't know, but that's the beauty of it, is that today, if we look in the decentralized finance, which is generated by Ethereum protocols, we have something like $50 billion locked, total value locked of money, which is verified by some fiat currency. And this is why I believe that there will be some form of cryptocurrency making its way, muscling in. It might not be Bitcoin, it might not be Ethereum, but we are that way. And it's inevitable that this is going the way the central banks will embrace these new types of cryptocurrencies. We don't know yet. And this is why this is all speculative. But at the end of the day, Bitcoin is worth 40,000 today. There's a reason for that.
And just in case anyone thinks that this is investment advice, as we said at the beginning, this is just personal opinions. And just to prove that you should trade against me, I got paid by a customer in one Bitcoin, which was worth $5,000. I thought it was going to go down, so I cashed it in. Oops.
I felt rather cynical about El Salvador's announcement. I mean, apart from being a failed democracy, and as Roy pointed out, moving into a dictatorship, I just cannot see a bunch of shopkeepers or shoppers in San Salvador waiting for the price of Bitcoin to change before they buy their goods. It is the ultimate success of any cryptocurrency, and let's stick with Bitcoin because of its dominance. To Laurent's point earlier, its success will be based on when it becomes broadly accepted as a means of exchange for goods and services. As to David Schoen's point, the dollar is accepted because it was based on trust, not gold, after 71. We could get a point where there is no. It always makes me feel a bit cynical when every Bitcoin discussion is always linked back to the price of dollars. In other words, it's dollars that are driving it, not Bitcoin itself. But should we get to a point where Bitcoin, for Bitcoin's sake, is the value that we either get paid in, we use to as an exchange? But could that happen outside of government intervention, or will governments just shut it down?
So government can't shut it down. They can ban it in their respective jurisdiction, but it's not. It's a global asset. That's the difference. And if you go to Kenya and you see how people transact with M-Pesa, you will understand that there is a way of using some form of digital currency that is actually safe and reliable for these people.
And one of the things that acts as a mitigant against bubbles is short selling, right? And I think that might be of interest to the audience here. And there is a borrowing and lending market in cryptocurrency. So maybe, Laurent, you can maybe talk to us about that a little bit.
So we have actually the greatest product. We have actually got a short Bitcoin available. So for the nays out there who want to short Bitcoin, there is actually a product that you can use through the conventional markets and is available through your broker. So this is obviously for those who don't believe in it and believe that the price will drop. So, we've made it available, long and short. In terms of DeFi, in terms of securities lending, there is today, as I mentioned, over 50 billion that is locked. That money locked in various decentralized token. The most popular one that people will have heard of is Uniswap, but there's Aave, there's Compound, and there's various other players out there. They're offering rates of around 10 to 20%. And these are very wild rates, and certainly not kind of rates you would see today in financial markets. But these rates exist, and the majority of us don't have access to these rates. All we're doing is we're making these certain rates available to an audience if they want to look at it. And again, I don't think there is a right or wrong here. These currencies are available. These cryptocurrencies are available. No one is blocking them. I certainly believe in a regulatory environment. So I want to be clear about this, that gold is not regulated, oil is not regulated, and we went below zero on the futures market not so long ago.
The only comment, and I don't want to carry on this topic, the only comment I'd make about this liquidity provider issue is even in conventional markets, regulators have made it very difficult for liquidity providers to operate because of the capital cost. So it's been opportunistic liquidity providers in every market, and we've seen them switch off really across the board. I think that's fundamentally a regulatory problem. That if we're talking about this sort of brave new world of an alternative asset, why would we want to replicate the problems that we have with the current marketplace? So, look, I'll come to each of you if I ask you to do a brief wrap up. I guess, Laurent, last words to you and John. Laurent, over to you.
Thank you.
The
Look,
future.
we haven't really been able to touch the SEC lending side, which I thought was probably at your heart. But there is a huge industry out there that is very well supported with financial people and institutions that want to explore that. I think we're scratching the surface. I think we are literally at the beginning of a new decentralized environment that will allow people to be able to trade directly between you and I, as opposed to having intermediaries. And we're literally at the forefront of this. And this is now a new beginning. I'm not saying that Bitcoin as it stands today is the solution. I don't believe it is. But it's certainly a way towards it. And there's going to be probably many other forks that will dictate the new protocol of this very fascinating cryptocurrency.
I was at a informal information session for a platform maybe about a year ago, and they talked about the environment for borrowing and lending. And I went up to them afterwards and I said, "Look, the conversation that you've had, all really relevant points, but it reminds me of what it was like talking about securities lending in the 1990s. So
Sure.
maybe an old dog like me will have an opportunity for some new tricks in future." I hope you're right about that. So
I believe it. I honestly
yeah.
believe it, because I'm seeing this from financial institutions that yesterday would say no to this industry, and today they are now dipping their toes in it and putting some money.
That's the issue. The reason it hasn't taken off until relatively recently, in my opinion, is the lack of institutional money, and that's a thing that's really changed in terms of attitudes over the last sort of 6 to 9 months. I think. So thank you, John. Any thoughts?
Yeah, I mean, that is a good point, and I concur with everything that Laurent just said. I mean, it's clear that institutional money is now taking real interest in this. And if you look at I think I read yesterday that a survey of hedge funds are going to allocate between 7 and 10% into cryptocurrencies in the near future. So given that and the rise of various custodial banks talking that have announced their digital, asset servicing groups, it's clear that they think there is a need to service this industry, and I suspect that will continue to be the same, to continue to develop rather. I'd like to see it as a currency, though. I'd like to see it used for the exchange of goods and services more than an asset class in its own right, because I think to the point that was made about two farmers in Kenya being able to exchange value, that does have a value. It does have a value in areas where people cannot access bank accounts, but it cannot be in a entity that is so volatile at the moment. And I suspect the volatility is really about its infancy. I think this is still very young. And to Laurent's point, it may not be Bitcoin in the future, but it will be something as testified by the fact that every central bank in the world is looking to develop its own digital currency. And they're not doing that for fun. They see some value in that. So that's where I stand at the moment, and it will probably change tomorrow.
This is all very new as an industry, as a topic. Even if we say it's sort of a decade old, look, the reality is that's nothing. Gold's been around 2,000 years as a medium of or a store of value. So we got a little ways to go yet. And who knows where it goes. But look, thanks for everyone for watching, commenting, and participating, guys. So thanks, and we'll see you next Wednesday.
Thanks.
Thanks, Roy.